With such low interest rates and the amount of money that's being printed, a lot of people are hesitant about having money in bonds in their retirement portfolio. So in this video, I'm going to share a quick view about bonds in the current environment and then what you should be thinking about as you're planning your retirement. If I haven't met you yet, I'm Dave Zoller and I run a wealth management firm, Streamline Financial, with my business partner, Tim, and we help people plan for and live their ideal retirement. If you're looking for a retirement planner and you're thinking about reaching out to me through our website, I may not be able to get back to you right away. We're really only able to help 2 new clients per month, and we have a bit of a wait list. So if you do reach out, I'll do my best to get back to you, but I just want to let you know what to expect moving forward. So some people I've talked to will say, why would I want to have any bonds in my portfolio? Where others, they've got the majority of their assets or portfolio in bonds or cash. There's a rule of thumb number out there that can be dangerous, and that says you should take your age, and that's the amount or the percent you should have in bonds. So just be careful with those rule of thumbs and recommendations that you see online. Just recently, Luke and Sean from our investment team were reading a paper on bond strategy, and this particular study showed that strategy ends up failing almost all of the time. So don't just listen to the headlines or follow what may seem like a standard practice. And that goes for me too. I've got an opinion and I get to see what other successful retirees are doing and what we're doing for them and what they've been doing for the last 22 years since Streamline was founded. But still, these are my opinions based on the history of our clients. So all I'm saying is that it's really important to think about your specific scenario and really talk to a professional about you specifically and not just the general advice that's out there. And just one more thing about rule of thumb strategies and how it ties into bonds discussion today is the most common one that you probably heard about is the 4% rule, right? Which is something like if you've got a mix of 60-40 stocks to bonds portfolio, you should be able to take 4% per year from that portfolio and not run out of money. That's the rule of thumb number that you probably have heard before. But think twice about listening to that. And the reason why I say that is back to the question of bonds. Really, over the past 40 years, bonds have had a pretty good run. Their yields haven't really dipped below 4% much around really until 2008. And the interest rates continued to stay low since then. And as you think about it, it'd be much easier to follow the 4% rule if we had bonds that had a nice interest payment. Well, things are different now, and that's why we need to think about retirement income planning differently too. And here's the main point when it comes to bonds. The question should not be what percent of my portfolio should be in bonds. It's really 2 questions, and it should be what's the current environment, and then what are the types of bonds? So are they long-term, intermediate, or short-term? High quality or high yield? Corporate or government? Or US or foreign? Really, the important factor is what is asset allocation within that bond portfolio, and how can you manage the portfolio through trigger-based rebalancing strategy? That way, it not only allows the portfolio to complement the stock side, but it also enhances the return while reducing the risk. So it's not a question of how much in bonds or am I in or out. It's more a question of how can we construct a diversified asset allocation that can be managed effectively between your income plan and goals, the attitudes you have about risk, and also the need for liquidity. Thinking this way is going to serve you better as you're thinking about your bond portfolio and what role it plays in your retirement plan. So in my opinion, bonds do fit into almost every retirement plan that we help our clients with, but the right kind of bonds and ongoing management is really the key to success in this part of the portfolio. So I hope that gave you some insight into how bonds might fit into a retirement plan. If it was helpful, then please like this video and subscribe, and then I'll see you in the next video. Take care.